Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Monday. These are the stories that set your agenda. OPEC Plus ministers meet in Riyadh, agreeing to extend production cuts while laying out a 12-month timeline to bring some barrels back online. Nvidia announces its next generation of AI accelerator chips, vowing annual upgrades to its technology. The CEO says the world is experiencing computation inflation. Plus, coalition talks begin in South Africa after the ruling ANC party fails to gain a parliamentary majority, losing power for the first time in 3 decades. Losing that majority for the first time in 3 decades. Let's check in on these markets then. After a muddled May, it is a sizzling start to June the 3rd, and it is risk on across these markets. Nvidia is part of the play coming through here, but also in terms of the exit polls of India, and Indian assets are rallying. That is leading to a risk on session in Asia and the filter and the read across to Europe. European stocks currently gaining a full 1 percentage points in terms of the futures and the guidance there, looking to add 51 points on a week when the ECB as well is expected by the majority, at least out there, the consensus view that it will cut for the first time in this cycle on Thursday. UK futures looking to add 0.8%. That's despite the fact that there's a bit of softness coming through for iron ore on concerns about the property sector in China. S&P futures looking to add 0.3% after ending the session Friday. For the week, it was down, but Friday you did see green on the screen for US and European stocks. Nasdaq futures looking to add 0.3%, and again unpicking this announcement coming through from Nvidia, but also AMD as well, trying to set the challenge in terms of competition. Let's flip the board and look cross-asset then, with the focus, yes, on the Treasury curve, also euro-dollar, and of course the details around the oil story. We'll unpack that for you in the next minute or so. Currently oil at $81 a barrel on Brent, just down 0.1% on the news out of OPEC Plus and Riyadh. 4.48 on the benchmark 10-year, just a move of 1 basis point. Of course, the personal consumption expenditures index on Friday coming in a little softer and maybe refueling bets on rate cuts coming through from the Fed. Euro-dollar at 108 as we count down to that decision from the ECB. And gold just off by 0.2% so far in the session. Let's cross over to Singapore now for a check on the Asian markets, where Avril Hong is standing by. Avril.
Yeah, Tom, a lot for markets to digest in the Asia Pacific today. We've got Fed rate cut optimism, but also China data and the India elections to keep an eye on. And on top of that, Nvidia suppliers in the region, they are the ones that are helping a gauge of stocks here to rally. They are the biggest boost. And we're seeing the Hang Seng leading the charge, green across most of the other benchmarks, although the CSI 300 is trailing behind. Flip the board because I want to show you what we got out of China data. The private survey, Tyson, showing factory activity that climbed by the most in about 2 years. This contrasts what we got out of the official PMIs last Friday, and it seems to point to a bit of an improvement, but our colleagues at Bloomberg Economics have suggested that don't get too excited. You know, this is due to seasonal factors. Don't forget as well that the private survey focuses more on the smaller export-oriented companies, so might not paint the full picture of the Chinese economy. Let's flip the board because I really want to talk to about Indian assets as we see the Nifty 50, the stock benchmark or gauge in the country, rallying to a record high. The rupee, bonds also climbing. This is as exit polls show a landslide victory for Modi, and there's that optimism of policy continuity as well as clarity. We are seeing the Adani Group stocks rallying today because this is, don't forget, the conglomerate that's seen as having business interests most aligned with the policy agenda of Modi. The power unit is outperforming, surging almost 14%. Overall in India, we are seeing utility as well as energy stocks rising today on the expectation that we're going to see more infrastructure spending. So really interesting picture today, Tom.
Yeah, rip-roaring rally there in India, with those results, of course, in terms of the election expected to be confirmed on Tuesday. Avril Hong in Singapore with the Asia market check. Thank you very much indeed. On oil then, OPEC Plus setting out a plan to restore some production as early as October. That's despite concerns, of course, over the demand outlook for oil and robust supply from beyond the the group. Let's bring in Bloomberg Horizons anchor Jumana Pasechi in Riyadh, who's been following all of this for us on the ground for us in Riyadh. Jumana, talk us through then the decision by OPEC Plus and where it takes us into 2025.
All right, good morning to you, Tom. Well, I've got to say, by any metric, for people who've been following the oil market for years, yesterday's set of announcements was slightly complicated in nature, namely because there are many different sets of cuts that the OPEC Plus alliance were referring to. But I think what's necessary for the market to take away here is that the group cuts, and those are the ones that all OPEC members should be bound by, are going to be extended until the end of 2025. And then you have another set of cuts. These are the so-called voluntary cuts introduced by 8 members in November 2023, worth 2.2 million barrels per day. And this is where it gets interesting, because the expectation going into the meeting was that those voluntary cuts would be extended until the end of 2024. Instead, what we got was an announcement that they were going to be extended until the end of Q3 of this year, so September 2024, after which they will be slowly phased out over the course of 12 months. And key here, quote, subject to market conditions. So OPEC are keeping themselves a little bit of wiggle room should they think that market conditions are going to change. One other winner also from yesterday's announcement, the UAE, they secured an extra 300,000 barrels per day of production in 2025, was a bit of a source of contention. They'd been pushing for more capacity. They seem to have got it good from a cohesion perspective. And in terms of the analyst takeaway here, it's interesting to see that many of the traditional analysts in this space are pretty divided about what this means for the markets. Morgan Stanley, for example, saying they see this as slightly neutral to possibly bullish for prices. Halima Croft from RBC saying the fact that they went at great lengths to convey that there is some flexibility to these voluntary cuts was a strong signal. Others, like Goldman Sachs, are a lot more bearish, saying that the announcement poses some downside risk to their $75 to $90 target range for oil. So lots of different views out there, but I think the price action is pretty telling. Oil hasn't done much this morning.
Yeah, really interesting. Just off, just a shy of 0.2%, currently $80.97 on Brent. As you say, it seems giving themselves optionality and a win there coming through for the UAE. To what extent was there a win coming through for the Saudis as well? On a slightly different story, but of course linked to the oil space, which is Saudi Aramco's share offering and the demand that we saw for that.
Yes, well, we spoke about this on Thursday. Aramco launched, they were going to be launching the secondary sale of their stocks on Sunday, and that started yesterday. And it seems as though the book building has started very strong indeed. They're looking to raise $12 billion, and just in the early hours of the book being open, they secured pretty much all of that demand coming through from what we would imagine, a lot of it from regional, some of the local investors, in addition to a handful of international orders that would have come through. But of course, Monday is a trading day. A lot of the international investors are back in the market. And what we're hearing is that the book building process is going to continue throughout the course of the week. We know that the price range is set between 26.70 Saudi riyals to 29. So it should price somewhere in that range. Where it does price, again, will be an indicator of how strong that demand is. But key here for the kingdom is how much international demand they can bring in. You remember back in 2019, investors had a lot of question about that ultimate valuation. And in the end, they only got about 23% of the deal was allocated to foreign investors. So it will be interesting to see at the end of the day with this book, with this secondary sale, how much of that ends up in the hands of the international community versus the domestic audience, where we know the demand is there. And if yesterday is anything to go by, has already breached that $12 billion mark that Aramco were looking for.
OK, Jumana Pasechi, thank you very much indeed. On the ground for us in Riyadh with the context around that share sale from Saudi Aramco and, of course, the details around that decision from OPEC+. Now to the tech sector, and NVIDIA's CEO saying it is planning to upgrade its AI accelerator chips every year and is unveiling as well a next-generation AI platform called Rubin. In a keynote address at National Taiwan University, Jensen Huang underlined how embedded he thinks AI will become.
Your future laptop, your future PC will become an AI. It'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
OK, at this point, let's bring in our tech reporter, Annabelle Drulers, who joins us from Hong Kong. Annabelle, what did we learn then? What else did we learn from Jensen Huang's keynote speech? This is feeding into the markets once again.
Yeah, that's right, Tom. I mean, he had more than sort of 2 hours nearly to sort of lay out his vision of where NVIDIA is going to go next. And it was certainly a lot of compelling visions, a lot of compelling different stories that were told of what really could be the future. But just looking at the hardware and the iterations we're going to have here. So firstly, there's the Blackwell processor that was announced only just a few months back, and this is something, of course, that's really essential for training large language models. So Jensen Huang told us that we're going to have an update to that, something that's much more powerful. It's going to be coming to market in 2025. And then, as well as you said just a few moments ago, we are going to get that new AI chip platform called Rubin. That's coming in 2026, and on this it was very, very scant details actually offered to the audience there that was at National Taiwan University. As we said, it's coming in 2026, so a couple of years down the track. But the analysts that we're speaking to, they say it's really important to understand that we're really getting into a year-on-year refresh cycle here. So it used to be every 2 years we get an update. Now we're moving to that 1 year process, and NVIDIA as well, really clear that it's pushing ahead with a very ambitious growth target and a growth objective to stay ahead of the pack.
Yeah, and we're also hearing as well from one of their key competitors, hasn't quite caught up quite yet, but AMD obviously intent on trying to close that gap to some extent, and they've been coming out with some of their announcements of their own as well, Annabelle. How significant are those? What are we reading into what we've been hearing from AMD?
Yeah, I think it's really interesting when you sort of compare, because AMD, as you said, it's probably one of the companies that's made more progress than others in trying to catch up to NVIDIA. Of course, NVIDIA just absolutely dominates this market. And when you take a look at their sales figures, for instance, AMD is making around $4 billion, or expected to make around $4 billion this year from AI accelerators. NVIDIA's in the 100 billion mark, so there's an obvious discrepancy there. But still, AMD, as I said, has been a little bit more successful in trying to catch up. And so we got this new details coming out. They've got new AI chips that are on the way. So this is going to be the MI325X. It's going on sale in the fourth quarter. So it's the successor to the MI300, which we did actually hear from the AMD CEO earlier saying that they are still seeing strong demand for that chip as well. So, yeah, lots of different details coming out of Computex, which, you know, just kicking off in Taiwan this morning.
Yeah, snappily named MI325X. Well remembered. Annabelle Drulers, thank you very much indeed, breaking down the details in terms of what we're hearing, of course, from the NVIDIA CEO and AMD, trying to step up in terms of closing that vast moat that does exist between the two companies. Let's check in what else to think about this week then. Big in terms of your agenda on Thursday on the central bank space. Really, it is the ECB that takes centre stage with an expected decision to cut interest rates for the first time in this cycle on Thursday. That decision, of course, not set, but that is the view from most out there in terms of the decision from the ECB. Then on Thursday, the EU elections as well. Really interesting to see to what extent there is this shift to the right. That is the fear from some, the expectation, the hope from others, arguably. And on Friday, US jobs report as well, rounding out the picture, at least giving more details in terms of the picture, the health of the US economy after some data on Friday suggested that consumers are starting to pull back. And maybe that aligns with what the Fed wants to see. Coming up, South Africa's ANC begins talks with rivals to form a government after its worst electoral performance since 1994. We are live on the ground in Johannesburg next. Plus, we are also going to be live from Mumbai as Narendra Modi's BJP looks set to win a decisive majority in India's election for the third time in a row. Indian equities soaring in the session this morning. This is Bloomberg. Welcome back now to India's election. An exit poll suggests Prime Minister Narendra Modi's party is set to win a decisive majority for the third time in a row. The expected win would extend his decade in power atop the world's fastest growing major economy. Let's cross over to Mumbai and bring in Menaka Doshi then, who's been following all the twists and turns of this election for us. Indian equities rallying on the back of this news. We haven't had final confirmation yet, but Menaka, the key takeaways then from the exit polls and that market reaction.
Well, the exit polls give Prime Minister Modi and his BJP a decisive majority, as you just said, so they're not going to be just well past the 272 or halfway mark of the 545 seats that were put to vote, but they're likely to beat their 2019 number and exceed it by at least 10 to 20 seats on average. Now, that is extraordinary for, as you pointed out, a government that's been in power for 10 years now. And not just extraordinary, but Prime Minister Modi seems to be expanding his footprint or hold across India. So in these exit polls, they indicate that he is expanding his footprint to newer places of India where his party was not in favor earlier. For instance, the East, where there seems to be a capitulation to the BJP, and in the South, where the BJP seems to be making new inroads. This, besides defending his strong position in the North, quite extraordinary, as you pointed out. If the exit polls turn out to be true, not only has he found some marvelous way to fight back anti-incumbency, but he's also found a way to extend his charisma for the next 5 years.
And if these exit polls are confirmed on Tuesday out of India, what are the key priorities for this refreshed Modi government?
We've already seen markets welcome what everyone's calling policy continuity. So you've seen an equity and bond rally in India. And this exit poll news, if confirmed, comes on the back of a slew of other good or positive news for the Indian economy. We've had a strong GDP showing for FY24 at 8.2%, a ratings outlook upgrade, an excellent dividend from the RBI, which gives the government more money to spend, and a solid monsoon forecast, which you know is critical to the Indian economy. But policy continuity isn't going to cut it, I'd suggest. In fact, this government needs to think of more ways to add jobs, which has not been a success area for the last 10 years, boost rural consumption, which has been in the decline for the last 2 or 3 years, bring in more foreign investment. Again, FDI has not been very buoyant over the last 2 or 3 years. So continuity is not going to be enough. Stability is not going to be enough. This government needs to find ways to do all of these things that I identified. Foreign investors are going to be looking at what Prime Minister Modi's government, if it were to come back to power, will do to boost manufacturing, will do with regards to the unfinished agenda on digital and privacy laws, and will do to factor market reform. Prime Minister Modi said in an op-ed piece this morning, we need to dream a new dream in India. That seems to be his agenda. We'll watch to see what his government has to say if it were to come back to power.
OK, Bloomberg's Manika Doshi on the ground for us in New Delhi. Thank you very much indeed. And of course, we look for those confirmed results, of course, on Tuesday. To South Africa now and the elections there. Checking in the rand, gaining for the first time in 4 days, up just around 0.2% versus the US dollar, as investors, of course, continue to digest the news there. The African National Congress gaining 40.2%, the worst tally since 1994. The ANC has begun talks, by the way, with rivals to form a government after its worst election performance since the end of apartheid. Take a listen.
What this election has made plain is that the people of South Africa expect their leaders to work together to meet their needs. They expect the parties for which they have voted to find common ground, to overcome their differences, to act and work together for the good of everyone.
OK, joining me now is Bloomberg's Jennifer Dabasaja. Jen, how significant then of a blow was this for the ruling ANC?
Right, Tom. I mean, they are still the main party here in South Africa, which we should remember. But yes, if we think about just the decline from 2019 to today, it was really precipitous for this main party. So you mentioned they got 40%, but before, you know, they were north of 57% of the vote in 2019. So yes, this is clearly voters sending a signal to the ruling African National Congress that yes, they can potentially be leaders here here in government, but they do want them to be working alongside another party. And that is really going to be the big question here. Who are they going to work alongside potentially to form this next government? And really, Tom, the big question, the big point here, too, if we just take a look at these results right here, it's just how much former President Jacob Zuma's 6-month-old party, the MK party, it is the third logo there on the screen, did, and just how well it did, largely at the expense of the ANC. So what this means going forward is a big question, and really what do voters want to see in this new government is what we're going to be paying very close attention to.
So what are the next steps then, Jen, for the party of Cyril Ramaphosa?
Right. Next steps are really for the ANC top brass to decide who they are going to work with. And potentially, I know you mentioned the RAND up for the first time in 4 days. Potentially that is investors somewhat optimistic after we heard President Cyril Ramaphosa talking about the fact that they will try to work together with other parties for the better of South Africa. But they have said that a number of the demands that they've heard from other parties, in particular from the MK party, suggesting or demanding that President Cyril Ramaphosa step down in order to form a coalition, it is not something that the ANC is going to consider. So potentially they start talking about working with the market-friendly Democratic Alliance. But there are some within the ANC who say their ideologies are so far apart. So how is that going to happen? But really the next steps are deciding in the next few days who their partner in government is going to be, and making sure that in the next 2 weeks under the Constitution, they need to form this government, what this government is going to look like.
Jen Sapasaja on the ground for us in Johannesburg. Jen, thank you very much indeed. Plenty more coming up. We've gone from an Indian elections to South African elections to a preview of EU elections. That's coming up. This is Bloomberg. Welcome back. Happy June the 3rd. Here to some other stories now making the news this Monday. Israel pushing back on a ceasefire proposal laid out by US President Joe Biden, with officials saying the plan they agreed to did not include a permanent halt to hostilities. Biden's three-phase plan that he had said was Israel's includes a 6-week truce involving hostage prisoner exchanges, a focus on a permanent ceasefire, removing Israeli forces from Gaza, and reconstruction. Ukrainian President Volodymyr Zelensky has accused China of working with Russia to undermine a summit to discuss his country's peace blueprint. In a surprise appearance on the sidelines of the Shangri-La dialogue in Singapore, he told reporters that Moscow is doing, quote, everything to disrupt the event by using Chinese influence and its diplomats. Zelensky is trying to secure support among foreign leaders for the mid-June summit. And Claudia Sheinbaum is set to become Mexico's first female president in a landslide victory. 3 exit polls project the former mayor of the nation's capital and candidate for the ruling Morena party won between 55 and 63% of votes. The coalition of opposition parties that had ruled the country for nearly 90 years is seen winning between a quarter and a third of votes cast. Coming up, we're going to do a deep dive in terms of the preview of European elections. We'll cross over. Oliver Crook's going to be on the ground for us, giving us an update in terms of what to expect around EU elections. Macron, as well, facing a significant challenge within his own country around the debt build-up in France. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. OPEC Plus ministers meet in Riyadh, agreeing to extend production cuts while laying out a 12-month timeline to bring some barrels back online. NVIDIA announcing its next generation of AI accelerator chips, vowing annual upgrades to its technology. The CEO says the world is experiencing computation inflation. And Narendra Modi is poised to secure a third term as India's Prime Minister, with exit polls showing his alliance set for a resounding win. The rupee jumps, India's stock market surges to a record. And there are a number of catalysts then feeding into the upside that we're seeing across Asian markets, but also the futures as well, looking to a very solid session this Monday in Europe, if the story holds. The NVIDIA catalyst coming through with that upgrade cycle, the Indian election details, of course, set to be confirmed on Tuesday, but the exit polls suggest, as we said, that the BJP and Narendra Modi are set for that third term. And then the data out of the US in terms of inflation and a slightly softer consumer adding to bets that the Fed will come through with at least one cut this year. European stocks then looking to add a full percentage point at this point, back above 5,000. UK futures, I should say, looking to add 68 points, pointing higher by 0.8%. US futures pointed to gains of 0.2%. NASDAQ futures looking to add 56 points, up 0.3%. Let's flip the board and look across at the asset then. At the US benchmark 10-year yields down currently 1 basis point after a bit of money moved in to the Treasury curve by the end of the session on Friday, of course, on the details coming through from the personal consumption expenditures and the relative softness that came through there. 448 on the benchmark right now. Euro dollar at 108 on a big week, of course, for that currency as we look to the decision from the European Central Bank and that expected rate cut, the first one in the cycle, coming through on Thursday. That is the expectation. $80 a barrel on Brent, just shy of $81, currently down 0.2%. Gold trading down 0.2 in the session at 2,322. So the politics of Europe now, where the far-right parties are aiming to make big gains in this week's elections to the European Parliament. Voting across the EU opens on Thursday, with some 370 million people choosing 720 lawmakers. Bloomberg's Oliver Crook joins us from Berlin for a preview. What is at stake here, Ollie? Why should we care?
Yeah, Tom, I mean, I know you've been tense with anticipation for the last 5 years for the EU elections, which begin this Thursday with the Netherlands, and then every country sort of progressively votes until Sunday, where you have everybody voting, the big countries like France and Germany. And it's really to set out this 5-year term to get the sort of priorities for the EU in terms of what they're going to focus on. Now, for a lot of people, what the actual importance of this is not entirely clear. So we spoke to a number of the politicians running for them to illustrate exactly what is at stake here.
I think lots of it is at stake.
This election is the most important election since 1979.
What is at stake is the future of Europe.
I think there are a lot of other issues too, like migration, the Green Deal, the competitiveness of the EU. But I think Ukraine will be the defining issue.
I do think that every nationalist party and sovereignist party in Europe are going to score.
What we are facing right now, if there is, for example, a surge of the far right, that the whole European project is basically going to be put in question.
And so what the EU needs to do here is basically set out that legislative agenda, but critically, Tom, the budget, the EU budget, which is one of its sort of strongest instruments. So depending on what the outcome is of the election, you're going to see that money go to different places. So we're expecting, broadly speaking, the center to hold, the center right to take the most seats, the EPP, Ursula von der Leyen's party, and then the center left also. Where you're going to see a lot of motion, and this is significant, Tom, is a huge loss of support that we've seen over the last few months for the Green Party in favor of the right and of the far right. So the right being the sort of Giorgia Meloni's party, and the ID group, which has historically held the likes of Marine Le Pen and AfD over in Germany. So you're going to see some definitely policy clash there on certain issues, like, for example, the Green Deal. Could you see money moving away from that European renewable projects and that sort of priorities and towards other things like, say, immigration, where the far right has certainly made it a much more a policy priority? Where you will see consensus, Tom, and this is as important as anything else, is for defense spending, right? The nationalist parties still believe in defense spending. So too do we see it across Europe, a support for getting that sort of spending up to where it needs to be, particularly with the EU election, or I should say the US election coming around the corner. Where they don't necessarily align, though, as we speak about defense spending in Europe, almost always in the same breath as support for Ukraine, that may not be always sort of an ironclad link. So these are the important distinctions that we need to make and look into going ahead into the vote this week.
OK, Bloomberg's Oliver Crook on the ground for us with that really important preview, setting us up very nicely for that vote, of course, across the EU later this week. Ollie, thank you very much indeed. Ahead of those elections, by the way, in France, S&P Global Ratings downgrading the nation's sovereign debt from AA to AA-. S&P says the French government has missed its goal to rein in the budget deficit, which is set to remain above 3% of GDP in 2027. President Macron has been campaigning on his economic record in the election. Far-right leader Marine Le Pen described it as a, quote, catastrophic management of public finances. Now, the main drivers behind the remarkably resilient American consumer are losing steam. At the same time, it seems the saving rate now stands at a 16-month low. A 16-month low as households have mostly exhausted the extra cash they squirreled away during the pandemic. Let's bring in Bloomberg MLive strategist Mary Nicola then for the take on the data that's been coming out of the US and what it tells us about the health or lack thereof of the US consumer. Mary, thanks for joining us. What is the take then? How should markets be interpreting the relative softness now that we appear to be seeing when it comes to the US consumer?
Yeah, the GDP data, the personal income data is showing signs that the consumer is slowing down, which shouldn't come really as a surprise, especially given how resilient the consumer has been for quite some time. So yes, they're softening, and things are, and especially activity data are pointing to more signs of softening there in the consumer. But at the end of the day, they're still holding up. And showing signs of relative stability. So we're not seeing anything that's too concerning as of yet. I think the key concern will be how we're seeing with the labor market. And if the labor market is starting to show some cracks, then of course you'll see more of that trickle through into the consumer data as well.
A big week, of course, for the ECB, Mary. What is your take on what the market should be looking for? It seems to be the consensus view is, of course, they come through with a cut for the first time in this cycle. What else do you expect investors to be scrutinising from this decision?
It'll be all about how the ECB lays things out in terms of where are the cuts going from here? Where are they taking it? There is still a lot of the messages that are coming from ECB officials are not clear on what is the trajectory of the rate path. And that's also one of the reasons why euro-dollar has been holding up, is that we don't have a clear idea of where rates are going after this June cut. So if we get more clarity in that direction, you could see a bit more negativity on euro-dollar and euro falling a little bit more from here. But at the same time, it will be about, can the ECB signal rate cuts thereafter? The key thing here is that the last week's inflation data showed that it's still not a clear trajectory on inflation, which could put the ECB in line with many of its global peers and say that they're going to remain data dependent, which is not something the market will want to hear.
OK, MLive strategist Mary Nicola, thank you very much indeed with the context there. Now to the airline space, and the IATA Director General says supply chain issues that have held up the delivery of new aircraft around the world could stretch into 2026. Willie Walsh speaking to Bloomberg's Guy Johnson at the association's annual meeting in Dubai.
In the past, we used to have to deal with a delay of a month, maybe 2 months. But now we're seeing, delays of several months, or indeed in some cases years. So I think this has now been factored in. I think airlines' ambitions in terms of growth have been tempered as a result of the uncertainty around supply.
And Guy Johnson joins us now from Dubai. Guy, you got that line out of him in terms of the time frame, 2026 potentially. Airlines then clearly still struggling in terms of supply chains, getting the aircraft that they need. What is your take? What are you hearing in terms of what it would mean, what it could mean in terms of the industry's longer-term profitability?
Tom, you were just talking to Mary about what's happening with the consumer. The consumer, according to the airline bosses that I'm talking to here, certainly continues to be strong. That's the message they're delivering. And what they're complaining about is the lack of aircraft to service those consumers right now. We've got the problems at Boeing. We know about what is happening there. But Airbus aircraft are also being affected as a result of problems with Pratt & Whitney engines. But if you take a step back, and I was talking to Willie Walsh about this, this is an industry that is growing really fast right now and trying to put a lot of capacity into the market. And in some ways, the fact that these carriers are being throttled back could actually mean more capital discipline, could mean that we don't see a big boom and then bust, it could keep the industry on track for longer. Now, some airlines certainly are being impacted by this in a negative way, but for others, actually the picture may be one that actually prevents them putting too much capacity in. So it's a really finely balanced decision as to whether or not this is a good thing or a bad thing for this industry. And then we come on to the key question, Tom, about how long this is going to last for. Now, you heard Willie Walsh talking about this maybe being something that lasts into next year. I've just been speaking to the Etihad CEO. He thinks we're actually still, the worst is still to come when it comes to this story. And I also spoke to Sir Tim Clark. He is the president of Emirates, in particular about what is happening at Boeing. This is what he had to say about how long it's going to take Boeing to get back on track.
If you ask me, this will be a 5-year hiatus starting from now. So I don't think they will recapture their production lines on all aircraft types. This is a challenge to them at the moment, given the pressures they're under. So I think one step at a time.
OK, so hearing there from executives within this industry about those supply chain challenges, and particularly, of course, Boeing. There obviously a lot of headlines around the turbulence story, that London to Singapore flight guy back in May. Is that a topic of discussion? Yep. To what extent are CEOs taking that seriously, making any changes?
We are maybe starting to see, Tom, climate change beginning to have an impact on this industry in a fairly meaningful way. As you referenced there, we've seen obviously headlines being made around that Singapore flight, but it's not an isolated incident. We are seeing a significant pickup, it seems, certainly according to the airline CEOs that I'm talking to, in the number of turbulence issues that they are facing. Now, we're not at the stage yet where they're going to start to change their protocols. I was just, again, talking to the Etihad boss about this. But I was also talking yesterday to the CEO of Korean, and he was talking about the idea that actually maybe we are going to see actually a significant pickup, and we are, as a result, maybe going to have to make some changes further down the road in terms of the protocols that these airlines are putting in place. So this is an issue that these airlines are taking seriously, Tom, and are really paying attention to right now here at the IATA AGM.
OK, Bloomberg's Guy Johnson, of course, on the ground in Dubai. Plenty more from Guy throughout the next few hours. Do not miss our conversations with the top voices from the IATA AGM. Guy Johnson will be speaking to the CEOs of Air France, KLM, Virgin Atlantic, United Airlines, Pegasus, and many more. A deep dive and a temperature check, of course, of that important sector. Plus, we are going to get the latest in terms of the India story. We'll keep across that, of course, the next few hours as well, because stocks and bonds and the rupee are surging as Narendra Modi looks set to win a decisive majority in India for the third time. We're going to market take an analysis next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, India's stocks have surged to a record, with the rupee and sovereign bonds climbing after exit polls signal an emphatic victory for Prime Minister Narendra Modi's ruling party. Joining me now, then, for the investment take is Tanvi Kanchan, head of UAE Business and Strategy at Anand, Rathi Shares and Stockbrokers. Tanvi, the rally is coming through today. We're expecting these results to be confirmed on Tuesday. These are just the exit polls, but again, the expectation is they'll be confirmed on Tuesday. We'll see if that comes to pass. What do you make of the market reaction and whether or not it can be sustained from here?
Hi, John. Thank you for having me. I think the exit poll results, the second they came out on the 1st of June, we were already anticipating the markets to kind of take that into consideration today. The second the markets opened, your broader level indices, that is your Nifty and Sensex, rallied by almost 3.5%. This is on the backs of expectation that the BJP-led government is not only expecting to cross the 350 landmark numbers, but it's also itching to, kind of touch the 400 number that we have been talking about. Now, looking back at the election, back in 2019, the BJP-led government kind of touched the 352 numbers, and the markets are kind of anticipating the same kind of rally to happen this time as well. The rally is on the backs of not only a government coming into place, but also the budgetary impact that it's going to have in the broader level markets.
So is this a bet on stability in India, or is this a bet on a reform agenda that is yet to be fully completed?
I think it's a bet on stability. And the fact that the sectors also, on a broader level, the growth sectors that we are looking at, whether it's manufacturing, whether it's industry, whether it's automated electrical vehicles, power, hydraulics, all of these sectors are on a broader level what boosts the economy. In Friday, the last GDP numbers also that came in, they came way above expectations. We saw the GDP numbers kind of cross the 8%, RBI also projecting a 7.5% kind of a fiscal year number. Now, all of these factors are based on the fact that the government is looking at a long-term average with regards to understanding its growth projection in the next 100 days, at least from the formation of the government. We're expecting your broader level sectors such as your banking sectors, your infrastructure development to kind of take that boost on the backs of the reforms that the current government is providing.
Foreign investors sold about 3.3 billion equivalent of Indian shares in the month of May. Does this bring foreign investors back, or does the valuation concern remain?
Now, I do agree that the Indian markets are fairly overvalued in comparison to its emerging market peers. We are somewhere valued more than 3x in comparison to China. But on a broader level, the markets do seem a bit fair valued as well, because this is a long-term projection. In comparison to our 20-year averages, we are somewhere in line with our long-term average. And also considering the fact that it's a very emerging market space that Indian economy belongs to, on an FII and FDI level, they are there is a certain level of expectation of inflow, outflow happening on the backs of your emerging market movement from Indian economy to the Chinese economy. But on a broader level, we do expect DIIs to kind of stay stable, to continue the inflow that it's currently at, to cross the 20,000 monthly SIP inflow that it's having. So even though there is a certain level of traction with regards to net exits on an FII FDI space, we do believe the long-term reforms that the government has currently in place will ensure that the long-term stickiness of FDI inflows will come back into the Indian economy.
OK, interesting. You touched on this in terms of the fiscal changes, or at least the importance of scrutinising the fiscal story in India. What is the fiscal impulse likely to look like in the months and quarters ahead for India? And how do you align, how do you position around that story?
So we're looking at sectorial growth. We are looking at private investments, consumption-driven economy. So on a sectorial growth, we are looking at manufacturing sector having a robust growth. So we saw about 11.64% on a year-on-year growth in terms of manufacturing and sector. Allied on construction basis, the private investment and government spending is again expected to be on an all-time high, with the government very clearly focusing on private investments. Your infrastructure and emerging markets are also looking to have an increased allocation into renewable energy. Your domestic demands and consumption somewhere has seen an all-time high. We're looking at equity market inflows kind of touching an all-time high, also because of increased participation by retail investors. So on a broader level, on a global standing as well, we are extremely positive. We did see the Indian markets, that is your Sensex, kind of cross the 5 trillion mark as well in terms of market cap. So looking at this broader level, we are kind of positive on the confidence in terms of the economic prospect that India currently holds.
Tanvi, Kanchan, thank you very much indeed. With the take there on what we are seeing in terms of the electoral results from India, with the exit polls again suggesting another significant majority for the BJP, and of course those results expected to be confirmed on Tuesday. From Anand, Rathi shares and stockbrokers, thank you very much indeed. As we look at the Nifty 50, up 2.9%, almost 3%, at a fresh record. Indian stocks at a fresh record on that news. There's plenty more coming up. Stay with us. This is Bloomberg.
What puzzles me is why Japan is so worried about the falling yen. It's not as if, yes, that does hurt consumer prices some, but Japan, as we say, has been a country that has long had a problem in convincingly exiting deflation, and a weaker yen after a little, give it a bit of a lag. That's actually positive for demand for Japanese goods and services. So the thing that I find puzzling is why the weaker yen is inspiring as much panic as it seems to be.
I don't think there is much room in the Japanese economy for significant interest rate hikes. Considering the yen's decline against the dollar, I think the situation may compel the BOJ to hike by October at the latest.
Okay, another hike by October at the latest. Not much room for the BOJ to hike. That one view, at least, with Paul Krugman also saying he's not so sure why they're so concerned about the yen. Well, they are concerned, and this was what's been happening since the end of April through to May. $62 billion being spent to prop up the currency. That is the most on record from the BOJ in terms of the intervention that's come through. Because don't forget, the yen was a 34-year low versus the US dollar. Has it been successful? To some extent, it has been. You're at around 157 right now. You haven't crossed back above that 160 level that seemed to be a bit of a line in the sand for the BOJ. But of course, the pressure is expected to continue given the rate differential, 0.1% from the BOJ versus 5.5% from the Federal Reserve. And that gap, of course, continues to be wide and is not expected to close anytime soon. We continue, of course, to watch whether the Fed cuts and what the BOJ does in response, whether it comes through with another interest rate hike in terms of closing that differential. But for now, at least, it is expected that continued pressure will remain for the Japanese yen. Let's flip the board and have a look at the PCE then and how this informs the Fed, because it came in top line 2.7% in line with expectations, but month on month softening to 0.2% in terms of the personal consumption expenditures index. But importantly as well, so inflation in terms of that measure coming in a little softer. But it is interesting as well, the consumer impulse seems to be softening as well out of the US, and wage demands as well weakening. So that all plays into the favour of the Fed. Here's another story to have on your agenda as well today. Roaring Kitty is back. You remember mid-May, there was a big run-up in terms of GameStop shares when he came out with his first tweet for a long time. This time, and by the way, stock is down 50% since that moment. Now he's coming through and showing what seems to be a $116 million position in GameStop. This is Keith Gill, Roaring Kitty. So we watched that stock. It is called higher. The meme stock frenzy appears to be back. That ties back into the Fed conversation around liquidity. There's plenty more coming up. Markets Today is next. This is Bloomberg.